So get over there, take your best photo, post it on Twitter, use that hashtag Meridian2020. Speaking of prizes, win prizes with our quiz. Just had a quiz question.
The top 10 photos
in which country
photos
was Vibrant
shared
launched?
on Twitter
The answer,
with the hashtag
Argentina.
Meridian2020.
So Vibrant is a new user-friendly app that currently allows Argentinians to easily deposit Argentinian pesos and convert them to Stellar Network USD tokens. As the Vibrant.cash website says, protect yourself from inflation, no limits. Vibrant is pretty slick, and one of the things that makes it so slick is that you can set up and recover your account using only your email address or your phone number. You don't have to worry about keeping track of your secret key or a convoluted recovery phrase. It's a really simple user onboarding experience, which if you've ever built a blockchain-based app, you know that's a nearly impossible thing to achieve, right? It feels almost like black magic. So how does Vibrant achieve the nearly impossible? In our next session, SEP-30 and the importance of key management and recovery, Lee McCulloch, principal engineer at SDF, is going to walk us through exactly how it works. Lee, take it away. I think that there might be an issue with your audio, Lee. At the moment, it's just sort of playing some sort of loop. And let's see if we can get that sorted out. I mean, we're super excited to have you. Everyone's ready to hear about key recovery. Maybe unmute it for a second. Let's see if it's still doing it. Yes, it is. It has like it's like a loop. It's going ka-donk, 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 ka-donk. So of course, we've made it so far with very, very few technical issues. We're gonna just give us a minute while we sort this out. I'm sure that we'll figure it out shortly. We will be right back. In the meantime, just take a second, think about key recovery, and we'll be back in a minute with Lee McCulloch to tell us all about it. Hey, everybody, thanks for sticking with us. We had a little bit of a technical difficulty, but now we are back with Lee McCulloch, who's going to tell us all about a new system for key management and key recovery. Lee, it's good to have you back with us. Thanks for fixing that. And please tell us all about SEP-30 and the importance of key management and recovery. You're on.
Thanks, Justin. Hi everyone. My name is Lee McCulloch. I'm a software engineer at the Stellar Development Foundation, and I'm working on improving the user experience that users have or individuals have using Stellar and the businesses have building on Stellar. And I'm going to talk about the importance of key management, how it defines the user experience of a crypto product. I'm also going to talk about Stellar Ecosystem Proposal 30 and what that is, how it can give wallets an end user experience that is comparable to consumer financial products. When we talk about key management, it's critical that we're on the same page about what that means. So we're going to start there. At the store of owning a Stellar account or funds on many blockchains is a key. On the Stellar network, if you have an account, you have a key for that account. But that key doesn't look like this yellow key. It looks more like this. This is a Stellar public key. It's easy to identify because it starts with a G. The public key for an account is also the account's address. So if anyone sends funds to this address, they're going to show up in the account's balance. This is what a Stellar secret key looks like. It starts with an S. On the Stellar network, we call the secret key that defines your account address the account's master key. If you create a new account on the network and you don't change its configuration, your master key is what you use to control your account. If you're using a Stellar wallet today, you might be thinking that you've never seen one of these S secret keys before, and there are a few reasons that could be the case, and we're going to come back to that. It's worth us talking concretely about what it means to control an account. So let's have a look at how a key can control an account. A secret key controls your account by signing transactions. It's similar to how signing a check works. A check specifies an amount to be paid from the payer to the payee, and a Stellar transaction specifies an amount to be paid from a source to a destination. Like a check has a box for signing with a pen, Stellar accounts have signers, and signers add a signature to a transaction to authorize it. The default signer is the secret key that defines the account address, that master key. But a signer is just another key that can authorize transactions for a Stellar account. Accounts can have more signers as well, in addition to or instead of a master key. Accounts can be configured to let those additional signers authorize transactions individually or together. On Stellar, that configuration for what combinations of signers are required to authorize transactions is controlled by setting a threshold on the account and weights for each signer. For example, if you wanted to let either of these signers authorize transactions, you could set a threshold of 1 and give each signer a weight of 1. Only one signature with a weight of 1 would be required to sign for the account. This would be similar to how checks for a joint bank account can be signed by either person. If you wanted both of these signers to authorize transactions together, then you could set a threshold of 2, requiring 2 signatures to meet the threshold. This would be similar to how checks from a business bank account might require signatures by 2 employees. You'll hear people use the term multi-sig to refer to accounts that are configured with multiple signers. But most accounts on the network use only a single key, that master key, and therefore only have 1 signer. Key management is how these secret keys are managed and used, whether it's the single master key or a more complex configuration. Unlike checks, users don't usually manage their keys and transact with them on pen and paper. That's where wallets come in. Wallets are applications or products that help users manage their account. Users might download the application on their phone or sign up on a website. Wallets play a real pivotal role in key management because at the core of a wallet is key management. A wallet's core job is to store a key, protect it, help the user transact with it, and then prevent them from losing it. A wallet is really a user interface for key management, and how a wallet implements key management will define the experience that the user has. Let's have a look at some ways that wallets define their user experience through their approach to key management. So many wallets, they have that master key as the only signer of the account. This means that the account has one key, one signer, and that key is probably stored on the device, such as a phone. It's really easy to lose a key on a phone because phones are easily damaged or stolen. I've dropped a phone in a lake and several toilets and destroyed other ways. It's really easy to lose things which are just on a phone. So wallets help you not lose your key using a few different approaches, which we're going to walk through. For each approach, we're going to consider what responsibilities the user is taking on. The reason that responsibilities matter is because the responsibilities a user has are as much the user experience of the wallet as the wallet's user interface is. I'm going to use these icons to represent some of the responsibilities that a user might have. So we've got writing the key down correctly, storing it safely, being able to find it or not lose it, protecting it from natural disasters, protecting it from theft, and then finally, trusting someone else to do these things for them. The first approach we're going to consider is really the simplest that a product can implement, and that's to ask the user to write down or back up their secret key, that master key for their account. This is simple, direct, very easy to implement. It's really the ultimate in be your own bank. You hold the keys, you have 100% control. But with a lot of control comes a high degree of responsibility. That responsibility is the burden to do most of the things that we just listed. The user has to write that key down exactly correct, store it safely, not lose it, protect the key from their home burning down, protect it from people who just might stumble on it or find it and then steal it. The only thing that this approach doesn't require of the user burning down is to trust someone else to look after that key. If a product uses this method with the wrong demographic, users may drop out during onboarding purely because writing the key down is inconvenient or confusing. In the worst case, users who are not equipped to implement this high degree of responsibility may complete onboarding, then experience loss. And that experience may create feelings of distrust, fear, or dislike towards the products, brands that didn't really set them up to succeed. We've all heard stories of lost keys and stolen coins, and we don't want that experience for our users. Another similar approach that addresses some of these shortcomings is the use of mnemonic phrases or recovery phrases. So they're 12 to 24 word phrases that can be used to derive a secret key. This approach is really popular. They're easy to write down, they feel friendlier, but if this is the only method for account recovery, it suffers many of the same problems as the secret key. An account holder is still writing a key down on paper and hoping that it won't be lost or stolen. It's 2020. We've been told for a while now not to write down our passwords, and writing down an secret key or a recovery phrase is much the same. For users who are equipped to protect the key themselves, these two approaches might be great. And if you're a product developer that's targeting this type of experience, that's great too. However, we know that products sometimes pick these options because they're simpler to get started and not because of an alignment with their users. Products using these approaches could have really slick user interfaces inside the product, but the user experience of the product extends out into every way that the product impacts a user, which includes implementing these responsibilities. If the user has to protect the key outside of an app in the real world, that's part of the user experience. If the user fails to do that well, that experience of failure is part of the experience of the product as well. So let's move on to some approaches that require more effort on the part of the product and see what we have there. Some products are at the other end of the spectrum when it comes to key management. These products, they store and manage your keys for you. You trust the operator of the product. They perform transactions based on your requests, and you rely on them to keep your assets secure. In this setup, the product might hold your assets in a unique Stellar account that only holds your assets, or they might hold your assets in an omnibus account, an account that just holds all of their users' assets. They might carry insurance or meet compliance and regulations that give you confidence they really are holding those assets for you. Products like this can create any user experience that they want because the product can absorb key management for the user. They can offer familiar authentication like username and password or SMS codes, and they can offer account recovery like reset your password, or identity checks like verifying your passport. For products where the user manages their own keys, getting that same user experience is desirable, especially if the product is targeting end users who don't have the capability to protect their own keys. One way that products attempt to do this is to change the thing that a user needs to protect from a key into a password. In this setup, the key is encrypted using a password that the user enters into the wallet but is never shared with the server. The wallet server is not able to use the key because it cannot decrypt it. This may feel more familiar to a user because we're already accustomed to remembering passwords for our email and our online accounts. The user experience may appear to be similar to that of a traditional financial product, but because a secure encryption password is required that can't be shared with the service, this approach suffers some of the same problems as with the secret key or the recovery phrase. If the user forgets their password, there's no forget password feature that lets them just quickly reset it or get a new password. So their account will be lost. All the responsibility is on remembering it and protecting it, and that responsibility is still on the user. This approach on the surface appears to have a smooth user experience, but when the user chooses a weak password or loses their password, the experience can still be heartbreaking. So if we reflect on the approaches that we've discussed so far, the approaches requiring a low degree of responsibility are the solutions that manage the key for the user. The responsibility is really converted into trust into the product or the third-party service. The approaches that require many user responsibilities are the solutions where the user manages their key, their own key. And the innovations that attempt to make the user experience better don't actually take that many responsibilities away from the user. At the Stellar Development Foundation, we've been exploring how products can change the user experience without shifting trust into a single entity. We've been exploring how we can leverage the multi-sig features that are built into the Stellar network to help us here. Multi-sig is that feature we looked at the beginning, where multiple people can sign transactions in the same way that multiple people can sign checks for a bank account. So that exploration so far has led to the SEP-30 account recovery protocol. SEP-30 is a Stellar ecosystem proposal. That means it's a proposal for use in applications that are built on the Stellar network. SEPs are primarily concerned with interoperability. They provide the foundation for products to connect or interoperate to leverage each other's network effects. SEP-30 specifically defines an interface that sits between wallets and account recovery servers. It's an approach to key management that's focus is on making the user experience of a wallet as user-friendly as possible and more akin to traditional consumer financial applications that non-crypto users are familiar with. Its goal is to give the user the option of giving up some of that responsibility without giving any single entity control of the account. So a wallet that implements SEP-30 does many of the same things that other wallets do, but instead of backing up the master key, it helps the user to get a new key when they need it. It prevents the user from losing their account and not their key. The user's Stellar account doesn't change, its address stays the same, but the user's signing key changes. So SEP-30 defines an API that a server implements and that a client consumes. That API includes two endpoints, one to register accounts and another to request signatures for transactions for that account. A wallet uses that first endpoint to register an account with the server, In the request, the wallet tells the server what identities are allowed to request signatures for the account. Those identities can be anything from things like an email address or a phone number, login with some other provider, or maybe it's verification of a postal address, passport number, driver's license number, or some sort of national identity document. The wallet authenticates using SEP-30, which is a Stellar ecosystem proposal that defines an authentication flow that allows a wallet to prove to a server that it is in possession of an account. It's in possession of keys that can sign for an account. This way, the server knows through SEP-30 that the client should be able to choose who can sign transactions for the wallet. In the response, the wallet gets back a signing address that the server is going to use to sign transactions for that account, and the wallet can make that signing address a signer of the account that it manages. The second endpoint is transaction signing. A wallet calls this endpoint with a transaction that it wants the server to sign. It will do this when it's lost its key, and it needs the server to sign a transaction for it. The wallet authenticates using an identity provided during registration. Once the server confirms the identity is registered with the account, the server will sign the transaction and return the signature to the wallet. So SEP-30 is currently being used in one wallet, and that's the Vibrant wallet, which is a non-custodial wallet designed to help users protect themselves from depreciating assets and high inflation. It supports deposits and withdrawals with anchors, stores value on the Stellar network, and it uses SEP-30 for account recovery with an independent third party, Lobster. The Vibrant wallet presents a user experience designed for the end user. You log in with a phone number, you don't need a password, and you're not required to back up your key, although it does give you that option. Let's have a look at an example of how Vibrant implements SEP-30, which will show us how well it could use SEP-30, the two SEP-30 endpoints, to support account recovery. We're going to walk through the flow of onboarding a new user, and then we'll have a look at what happens if they lose their phone. So the user experience for onboarding in Vibrant is much like the flow of other end user applications. The user is asked for their phone number and an email address, which will be used as their login credentials. They're verified both by entering a code and clicking a link. The app uses the phone number and the email address to register the account with those two independently operated servers that implement SEP-30. One's operated by Vibrant, the other by Lobster. The user is also asked for a couple of things like their name and their username, but really that's it. They're in the app. Everything is set up at this point for them to be able to recover. Let's have a look behind the scenes at what the wallet had to do to prepare the user for account recovery. In these diagrams, our user is going to be Sophia. When Sophia creates an account with the wallet, the app on her phone generates a master key, and that the wallet server creates the account associated with that master key. The master key will be one of those big S secret keys that we looked at. The wallet then goes on to register the account with two recovery servers. Each server has their own key that they generate themselves. Each server is operated independently by different entities. So for Vibrant, we've got Recovery 1, operated by Vibrant, Recovery 2, independently operated by Lobster. The wallet proves to each server independently that it has authority over the account with that SEP-30 authentication flow, and tells the two recovery servers that Anyone who can prove possession of the user's phone number or email should be allowed to request transactions to be signed. The wallet submits a transaction to the network, adding both of those servers as signers on the account. The wallet sets the weight of their signatures so that neither server has independent control of the account. Both servers have weights of 10 and must both sign a transaction to meet the threshold. Each recovery server will be able to sign a transaction at the request of the user, but the transaction is only going to be authorized if signed by both servers. The only individual with independent control of the account is Sophia. So let's walk through the recovery process. Let's imagine that Sophia has lost her phone and she's got a new phone. She opens the app, she enters her email address, she verifies her email address by clicking a link that's emailed to her. She then verifies her identity with a second recovery partner. In the case of Vibrant, this is Lobster. Lobster verifies independently with a second verification email. And that's it. Once verification is complete, each recovery server signs a transaction, and once they've both signed, Sophia's device has control of the account. So let's look behind the scenes again to see what the wallet did to recover the account. Starting from the top, the grayed out phone with the green key is her lost phone that still has a device key on it. Her new phone is in the middle and has no key for the account. Sophia's new phone is going to go through that process of collecting and verifying Sophia's identity. It generates a device key and signs into the wallet. Sophia is signed in, but the new device key is not a signer of a seller account. So her device cannot authorize transactions yet, even though it's signed into the product. The wallet app talks to the first recovery server and asks the server to sign a transaction that makes her new device key a signer on the account. Sophia then continues recovery with the second recovery server. Sophia authenticates with recovery 2 independently because the server is operated independently. Once authenticated, the server signs the transaction and returns the signature to the wallet. The transaction is now authorized with a weight of 20, and it's submitted to the network. The transaction removes the old signing key that was lost on Sophia's previous phone so that if somebody finds it, they can't do anything with it, and adds that new signing key that lives on Sophia's new phone. Sophia is now back in control of her Stellar account. And the steps that Sophia followed and the experience that Sophia encountered are similar to other end user applications. The experience the application creates doesn't bleed into Sophia's life in the form of codes or keys to protect or lose that are a single point of failure. Vibrant is really just one example of how to implement SEP-30. And if you're implementing SEP-30, you can choose to give the user more or less responsibility for key management. SEP-30 doesn't require the user to write the key down, store it securely, find it or lose it, protect it from natural disasters, or protect it from thieves, or trust a single third party who has sole control of the account. Instead, SEP-30 gives a product developer options and flexibility to choose the responsibilities that make the most sense for their users. The specification leaves many decisions in the hands of the product that implements it. The wallet consuming the API chooses which identities to set on accounts at registration, how many servers to register with, and how to divvy up those signer weights, as well as which transactions are going to get signed at recovery. The wallet can also choose if SEP-30 is the primary method of account recovery or one of several options. The server implementing SEP-30 chooses the authentication methods that can be used during recovery, like phone, email, physical address, passport, national ID, really anything that they would like. Some of these methods are going to facilitate a fast recovery, and others might take time to verify. Let's have a look at some variations of how SEP-30 could be used. So a wallet could implement SEP-30 and offer recovery phrases as an additional key. This is actually a feature that Vibrant provides alongside its use of SEP-30. It gives the user the option to back up their account on their own by getting a recovery phrase. Unlike other wallets, the recovery phrase is a separate unique key for the account and not the master key. This means the key can be revoked independently. A wallet could configure the recovery phrase to have control of the account on its own, like Vibrant, or take another approach like having it be used in conjunction with a recovery server. In this case, signatures are required from both recovery servers or one recovery server and the recovery phrase. A wallet can also support multiple devices where each device gets its own key. A wallet could deal with lost devices by revoking individual keys. This is great because a lost watch containing a wallet can be quickly revoked, removing its key as a signer without interrupting the use of other devices. Because each device has its own signing key, the source of transactions are also audited. If a user saw a transaction that was unfamiliar, they could identify which device signed for it and revoke that device immediately, or it simply might tell them how the transaction happened. A wallet could also use SEP-30 to shift key management to a third party who provides key management as a service. A wallet could do this by giving SEP-30 a SEP-30 server signing control of the account. SEP-30 can also support some other interesting use cases of account recovery. A wallet could support sending assets to people who are not yet users. It makes it possible for a user to create a temporary account that another user can recover the funds within. For example, if Sophia registers the temporary account with the recovery servers, not only with her own phone number, but with Daniel's too, Daniel can download the wallet, register, recover the temporary account, and then claim the assets within. A wallet could use this feature to facilitate invitations of new users, even new users who aren't on the Stellar network yet. So really, SEP-30 is a foundation of many possibilities. SEP-30 gives wallets the option to create an experience that's comparable to consumer financial products, while avoiding trust in a single third party who has sole control. But it still provides flexibility to be tuned to different and product needs. SEP-30 gives wallets the opportunity to create a great user experience, and great user experience drives adoption. So thanks for listening. If you'd like to read the SEP-30 specification, it's a 15-minute read. We've also discussed more of the why behind SEP-30 on the SDF blog. If you've got questions, I'm going to be hanging out in one of the virtual lounges at around 12:30 PST today. But I'm also hanging out on the key management channel on Keybase. There's also a thread on the Stellar Dev mailing list about SEP-30 if email is more your style. As more products implement SEP-30, we expect them to really push the boundaries for how it's defined today. And we're eager to hear of challenges and improvements or different ideas that you might have. So contributions and feedback are much appreciated. Thanks.
Thank you so much, Lee. Unfortunately, we don't